afternoon. My name is Karen Sheely, and I'm the Dean of John Carroll's Bowler School of Business. On behalf of John Carroll's president, Father Robert L. Niehoff, S.J., I would like to welcome you to another outstanding offering in the Mellen Speaker Series. The Speaker Series is sponsored by the Bowler School of Business's Edward J. and Louise E. Mellen Chair in Finance, established at John Carroll in 1984 through a grant from the Mellen Foundation. Edward and Louise Mellen were lifelong residents of Greater Cleveland who shared a commitment to the Cleveland community and its institutions. They believed that their resources came from the community and therefore should return to the community to support its institutions, particularly those related to education and healthcare. Through the Mellen's generous support, we are able to bring to campus chief executive officers of Ohio headquartered publicly traded companies to discuss the strategic focus of their companies and the challenges they face. The Bowler School strives to provide the best in undergraduate and graduate management education. To this end, our programs combine instruction in cutting-edge business theory with opportunities for students to experience firsthand the application of these theories in practice. The Mellen series is an outstanding example of this approach. In addition, the Bowler School recognizes its responsibilities as an institution of higher learning to provide opportunities for community lifelong learning. And the Mellen series is a natural vehicle for this purpose. As the first woman dean of the Bowler School, I would like to welcome today's speaker, Ms. Beth Mooney, Chairman and Chief Executive Officer of Key Corp, as our first female Mellen series speaker. And now let me introduce Dr. Leroy Brooks, holder of the Edward J. and Louise E. Mellen Chair in Finance, to introduce our distinguished speaker. All right.
Thank you, Karen. First, for students, a quick statement first. Please stay seated until after the closing of the presentation by Ms. Mooney, and after I've made closing comments. If it gets close to the end, we'll take a quick break and let the students exit for the classes. It looks like you're running for some time, but you will make your classes. We'll be assured of that. Now, for the purpose of the series, we're very pleased to have Beth Mooney here today as our 54th Mellen Series speaker. Ms. Beth Mooney, Chairman of the Board of Directors, Chief Executive Officer, and President of Key Corp, started in banking, Republic Bank in Dallas over 30 years ago, but became a vice president by her late 20s. Her background there, she'll have hopefully some interesting comments about her first job at the bank, and I'd like to be interested in hearing it. In 2000, Beth Mooney became CEO of Ohio Operations for Bank One Corporation, now part of J.P. Morgan Chase. At AM South, now Regional Financial Corporation, she became CFO in 2004, after first heading as Tennessee Bank. She joined Key Corp in 2006 to become vice chairwoman in charge of community banking. She boosting deposits during the financial crisis by adding and overhauling retail branches. So she was able to contribute at a time when a lot of people in banking couldn't do much of anything. The first woman to lead one of the 20 biggest independent U.S. banks was brought to her post on May 1st of last year, becoming again Chairman, Chief Executive Officer, and President of Key Corp. Beth Mooney is also active in contributing directly to our community. She is a member of the Financial Services Roundtable, a trustee for United Way of Greater Cleveland, and the Cleveland Clinic Foundation. I have powers I don't know. The trustee and treasurer of the Musical Arts Association, also known as the Cleveland Orchestra. Ms. Mooney holds a bachelor's degree in history, summa cum laude, from the University of Texas, and her MBA from Southern Methodist University. As recognition of her contribution to her profession, Ms. Mooney received the Women of Achievement Award by the way WCA in 2008, In 2011, she was listed as one of the world's 100 most powerful women in business. In Forbes magazine in the same year, Fortune magazine's most powerful women in business. Plus, the women on To Watch by American Banker. Now, Beth Mooney will tell you about Key Corp. We're very pleased to have you here as our 54th volunteer speaker. Beth?
Great, and thank you for that welcome. And I did not realize that by the first woman dean that I was going to be the first woman speaker at the Mellen series. So I think that's actually a little serendipity that I think on the verge of becoming my one-year anniversary as the CEO of Key Corp. I get the opportunity to share this afternoon with you and make a little history here as well. So I appreciate the opportunity, and I'm going to try and do a couple things. One, part of what I was asked to do was talk a little bit about Key Corp. As you go through your academic training, I think it would be interesting to give you just a little insight into our strategy, what we're trying to do, how I see the world as the CEO of a Cleveland-based bank. And then second, I am going to, as Dr. Brooks alluded to, maybe lace in a few stories of what it was like in the day. A long time ago when I graduated from college, about being a woman breaking into the business world, because I think we've come a very long way in one generation. So I think I will share a few of those stories. But I was going to start with this notion of strong, focused, and building momentum. That is actually what we have put on the cover of our annual report this year. The heading is Strong, Focused, and Building Momentum. And as I was thinking about why I think that resonates with our shareholders and translated it to this group, I thought, you know, that might sound like wanting to be a C student, because you probably have had the opportunity to have people come and talk about innovation and double-digit growth and new products that they're bringing to market, or foundational or earth-shattering things they're doing. And building momentum might sound like you're not aspiring very high. But I think before you make that judgment, one thing I'd like to say is the context of our industry in this particular economy is not a time for the faint of heart, I guess I would put it. Clearly, if you think back 4 years ago, in 2008, we had a financial crisis we call it the Great Recession. There was nothing like it since the Great Depression in the 1930s in the United States. And I will tell you that specifically, it very much challenged the banking industry, which was the epicenter of the downturn. And to this day, we stand here with an economy that is still trying to struggle to have a full economic recovery. It's slow growth, it's high unemployment. It seems like the notion that the world is flat has been proven, because just this week, the market jitters in the stock market are related to Spanish debt, and whether or not spreads on the Spanish debt and their ability to successfully auction suddenly sends our stock market into double-digit declines in 1 week. So it is a world that was forever changed after 2008, and specifically in the banking industry, we are the focus of re-regulation with Dodd-Frank and various things that are limiting certain kinds of activities, certain kinds of pricing, as well as a Federal Reserve that is trying to be accommodative and stimulative to the economy to try and help ensure that we get ourselves into a full recovery, and keeping interest rates very low. Well, very low interest rates actually don't help banks make money. We take in deposits and we lend them out as loans, and when deposits are worth 0 to 25 basis points in a low interest rate environment, we actually aren't making much money on our deposits. So a whole source of our revenue has changed. So how we, as an industry and specifically as Key, translate that we are doing the right things that will build franchise value, build a strong bank, which I like to say a strong bank right here in our backyard in Cleveland, Ohio. How you moderate expectations but also talk about the future is part of the challenge that I've had as our new CEO in telling the Key story. So I'm going to show you along the way some of what we have told investors, what we tell our own employees, what we tell our markets about the Key story. But I will tell you, at the end of the day, I do feel like we are well positioned. We have very much taken ourselves back to basics in a relationship strategy around making sure we have talented people who are giving great service, who understand our clients' needs, and that is going to be the cornerstone, I believe, of our success in the future. But first, a few facts about KeyBank. We have $89 billion in assets. That makes us the 14th largest bank in the United States. $61 billion in deposits, a little over $7 billion in our market cap, over 1,000 branches, almost 2 million customers, and 15,000 employees that I stand here today who I represent, who do great work for our clients and our communities every day. Where are we located? We have a different and interesting franchise. Like I said, you think of the fact that we are located here in Cleveland, Ohio, but we actually, in being the 14th largest bank in the United States, are from Maine to Alaska. And those are represented in the blue, red, and the gray, blue, and blue, red, black. And in the gray are places where we also have our corporate bank has offices. So we are spread across the United States doing business in local markets as well as with our corporate bank offices. I look at this map and tell you it is a source of diversity and a source of strength. In the financial downturn, different markets responded to the recession very differently. And as a result, we were able to, as Dr. Brooks alluded to, how we raised deposits, how we priced deposits, where we were able to lend, how we experienced the downturn, varied by different regions of the country, and actually helped smooth out our performance versus some of our peers who were concentrated, say, in the Southeast, which was a boom market that went bust and had greater problems than KeyBank did because of the way we were able to be geographically diversified. So I look at this and say it is an advantage for us to be across the northern tier of the United States and in 3 regions of the country. But there's another interesting point, which is in the day, if you were to go back to 2006, 2007, there was a lot of discussion among industry analysts were regional banks of the size of Key viable? Were they stuck in the middle? They were somehow disadvantaged because you had what I call the trillionaires, the big, large banks, and everybody thought large and getting larger, and you were stuck between them who were deemed to have product dominance and have more convenience and more locations, and small banks that were deemed to be able to be close to the clients in the community and provide service that a larger bank wouldn't be able to. So stuck in the middle was something we used to have to defend against. Fast forward to 2012, and I will tell you we're advantaged in the middle. It is the ultra-large banks who are mucked and mired in some of the bigger issues in our industry of regulation, the mortgage overhang from the foreclosure crisis, and then the smaller banks don't have the product capabilities and breadth of expertise we have. So suddenly, stuck in the middle is an advantage in the middle. So I will tell you, I think that is part of our competitive strength, being among the top 20 banks, but not among the very largest, nor among smaller banks. And of the 7,400 banks in this country, 7,000 have assets less than $100 million. So if you think about it, there are many, many small banks out there in this competitive landscape. During the downturn, I think one of the things we all learned was banks lost their way. We took outsized risks, we had concentrations that didn't make sense. We, as an industry, lost money. As an industry, the federal government did inject capital in the form of TARP into our system in the fall of 2008 to stabilize the banking system. And it became a domino of lack of confidence and lack of trust in banks. Dr. Brooks mentioned that we were able to raise deposits in 2008, which is very true, because if you look at the banks that ultimately did not make it through the crisis, it was funding and liquidity and deposits that caused them to actually fail. And there was a whole body of work that said people lost faith in their banks. They didn't lose faith in their teller. They didn't necessarily lose faith in their person they did business with, but the bank became a source of lack of trust. and I called it, we were all painted with one brush. Main Street and Wall Street looked the same. So as much as we tried to say, we're Main Street, we're not Goldman Sachs, nobody wanted to hear it. All banks were a lack of trust. So I call it a crisis is a terrible thing to waste. And what we needed to do, in our case at Key, was go back and talk to ourselves about what is our purpose? Do we have an employee promise? Do we have a client promise? And what are our values? Because I think we were being challenged to go back to basics and back to our core and redefine and get back to what banks were originally about. So I think it was foundational for us to step back and do that work. And we came up with these 3 simple things. What's our purpose? Our purpose is to help clients and communities thrive. That's what banks do. We help you with everyday financial needs. We do the things that help businesses and consumers, households and large companies thrive. That is our goal, and we make our money in our communities, and we turn around and give that back in the form of volunteerism, in terms of community support, foundation support. And our promise is that we are here to help you every day with your personal and business success. So this was, in my mind, a way for us to reframe ourselves as what do banks do and what should a regional bank like Key Bank be focused on as we set forward on our strategy. And then our values, I think, are very important. They are teamwork, respect, accountability, integrity, and leadership. And we've had those values for over a decade. There's not a person who works at Key who can't tell you what our values are, largely because it's an acronym, TRAIL. Or as our attorneys like to tell us, trial would work just as well. But sincerely, it is a values-based company and has been for a very long time. And my predecessors created that culture and created that legacy. And we've always said a high-flying individual performer who doesn't want to work on a team and can't live by those values will not be successful at Key. So we took ourselves kind of back to the basics of what are we here for? Purpose, promise, and values. But then you have to have a strategy. And not that we didn't have a strategy, but we needed to fine-tune it and really redirect ourselves. And so what are we and how are we trying to go to market? And on how we're trying to go to market, a simple statement. We grow by building relationships through client-focused solutions and extraordinary service. That will be our strategy. And I tell our employees, I tell our investors, I tell our board, we are not strategy of the month club sort of people. This will be our strategy. We will stay the course and we will build our bank back to greatness through the focus on our clients, on our relationships, on giving extraordinary service. I think that's incredibly important because, again, it's back to basics. It simplifies what we're trying to do. And underneath that, we have a series of strategic priorities about growing profitably, acquiring client relationships, managing risk and reward, which I think is actually very important because that is part of the balance of what got out of whack as we went into the financial downturn. Banks chased growth. We were among them. We took risks that were either concentrated or too large, or we weren't getting an adequate return. And when the economy turned, you were on the wrong side of the risk trade. You know, we lost a lot of money, learned a lot of lessons, and to come back, I think you've got to grow against your strategy, not chasing growth, knowing where your risks and rewards are. Your financial strength will be your ticket to weather the good times and the bad. Like I said, we learned the lesson of liquidity and deposits in the downturn. And I remember in the fall of 2008 when the world went upside down, we had people coming into our branches with gym bags wanting all their money, taking it out in cash, and I called it going to the mattresses. So there needs to be, as part of rebuilding that trust with your bank, we need to have the financial strength that people can rely on. And then this isn't last, is perhaps foundationally the most important, is engaging a talented and diverse workforce. We're a people business. We're as only good as our people. People make relationships. People make customers. People give service. So our quality of our workforce being talented, engaged, and diverse and reflecting our communities we do business in is foundational to what we do. And I will tell you that another legacy that I know I inherited and I actually represent is Key is well known for a commitment to diversity and inclusion. And I think that is critically important to how you go to market, that you reflect diverse ideas, you reflect the communities you do business in. And we do a lot to support diversity. Every year we have been cited by Diversity Inc., a magazine that surveys and lists the top 50 companies in the United States for diversity and inclusion. Key is a perennial on that list, and we're very proud of that and work very hard to keep there. We do a lot to support diverse populations in our bank. We have many, many networking opportunities, training opportunities, and have said for a long time, like I said, I'm the beneficiary of that diversity and inclusion, and it is a mantle that I have picked up. So standing here as the only female CEO of a top 20 U.S. bank, I feel an extra commitment to make sure that we have a fair and equitable and open workplace. And this is where I am going to compare and contrast what it was like when I graduated from college in 1970-something. Different world. Number one, I was in Texas. And if any of you are from the South, you might know the Bubba effect. It was not necessarily the most progressive place on the planet. I got out of college, as Dr. Brooks said, history degree, Phi Beta Kappa, summa cum laude, and I went looking for a job. The question I got asked everywhere I went was, can you type? The answer is, if you'll pay me, yes. My first job in a bank was I was a secretary. And let's say I did feel a tad bit underemployed, and I also really wasn't very good at it. And you don't even call them secretaries anymore, that's how old I am. And I got a chance to interview for the training program, where they were hiring all the MBA students and people who had business degrees, and one, they didn't let women in really. And certainly I didn't have a business degree, so I had a bona fide reason why I wasn't qualified. But I got my chance, I got the interview. True story. I got into this guy's office, Mr. Keith Schmidt. I would not leave until he offered me a job. I went in and viewed it as, this is my one shot, I'm not blowing it, I finally got an audience, and so I went in pitching why I could do the job. I'd go to graduate school at night, which I did. I got my MBA from Southern Methodist University in a night program. Give me a financial statement to read, just begging, virtually plead, and I told him I literally wasn't going to leave until he offered me a job. I was in his office for 3 hours. I often say, if somebody did to me today what I did to him, I'd call security. But at the end of 3 hours, he looked at me and just said, I've never met anybody who wants something so badly. I won't sleep nights if I don't give you a job. He said, I'm not going to say whether you're going to succeed or not, but I'm going to give you the chance. He said, everybody out there makes $18,000 a year. I'll pay you $12,000, but I'll pay for you to get an MBA. If you miss a class, you skip a semester, you stop, you're fired. So I said, with that, we've got a deal. And I would say, to say the rest of it is, history would not be fair, because I think there was a whole lot of hard work and some risk-taking and some other things that happened between here and there. But I will tell you, within a generation, I hope and I believe that my standing here is an indication of that the world has become a fundamentally fair place, and that as all of you look at your job prospects, that your abilities, your talent, your aspirations, your passions will drive where you go, not your race, not your gender, not your color, or other things that would interfere and make assumptions about what you should be capable of doing. And I know from Key as an employer, we very much feel that way. I think part of what you need to do when you build a strategy is say, what's your business model? And how are you going to be different than your competitors? So one of the things we asked is, what's your strategy? How are you going to compete? How are you going to differentiate yourself? And how are you going to win in the marketplace? And part of what we did is realize that we kind of have two banks. And we had two banks that we kept very separately under the umbrella of Key. One was our community bank, which I ran, and one was our corporate bank. And what we realized is, what could make us different is to find a way to bring those together. Our community bank, I call it, is the bank as most people think about it. It's the branches. It's your private banker. It's your business banking. It's your middle market companies. It's banking as most people think of the bank. And our corporate bank kind of looked more like Wall Street. It does debt and equity financing, high-end structured finance, M&A advisory work, a specialized leasing company. It has our real estate businesses in it. And we ran them as two. And we said, bring our corporate bank down market. Don't go try and run with the big guys. Come and be a middle market corporate bank. Align up with our customer base in the community bank. And no other bank is going to market as one bank between their corporate and community bank. And most banks, even our size, don't have a highly evolved corporate bank. So we now show up in the marketplace as very different along a continuum of businesses in terms of our capabilities and what we can do for them. And most recently, an example I will tell you is we had a company that was looking to acquire a competitor. They needed over $200 million of debt financing to do the acquisition. We were among a group of banks and specialty lenders who were bidding on the business. We won through our corporate bank. We were going to syndicate it out, sell the debt. We didn't win on price. We won on integrity because other banks tried to retrade. It was last summer as the debt markets and the credit spread started blowing out, and a couple of the banks tried to retrade the deal. Our people said, we gave you our word, this is the structure, we'll find a way to sell it. We got the business on integrity, not price. Then once they got it, they realized in order to grow the business, they had to invest. They needed equity capital. We arranged for a private equity partner to put capital into this company so that they could grow themselves as well as this company, a competitor they just acquired. And they did this without leaving their offices in Portland, Oregon, because we brought the whole bank to them, from loans, deposits, raising syndicated debt, to raising equity for them. And now, not only is that company clearly Key as their primary bank, but every executive in the company has also signed up to be a personal account with us. That's what it looks like when you bring the whole bank to the client. The other thing that we did during the downturn was, what's our brand? What is the look and feel of Key? How do you take that which we are talking about and translate it into the brand? What are the conscious choices around, we're people-oriented, we're trying to be approachable, we're Main Street, not Wall Street. I say that all the time, Main Street, not Wall Street. We are about our clients, we're about our relationships, and we're about the communities we so proudly serve. So we went and redid the look and feel of our advertising, our logo. Unlock Your Possibilities as a tagline is new, and created this where it's also the look and feel in our branches, it's the look and feel in our investor reports, it's how our annual report looks. Everything becomes very distinctively Key, and I'm obsessive about the details of our brand because that's how it becomes recognizable, scalable, expandable, is from the red on the awnings of our branches to the red in our annual report. It's the same color, it's the same font, it's the same detail, because if you're going to build a brand, that's part of how you need to do it. The other thing I will tell you is, I call this the response to the changing environment. You might remember the fuss this fall, for lack of a better term, about the Bank of America and the debit card fee. Well, a little bit of context on that. There was part of the legislation under Dodd-Frank that was the financial re-regulation bill, where Congress, I'm going to call it what it is without disrespect, put price controls on the bank. We offer debit cards. Many of you have them. You can pay for them in stores, and a merchant gets the benefit of immediate availability of funds. They don't worry about whether you're a deadbeat or not. It's our credit risk, not theirs. They don't have to handle checks. They don't have to have people processing payments. The banks do that for them. For that, we charge a fee. So the Congress decided that somehow the consumer protection suggested that fee should be regulated. The money goes to the merchants. We've yet to see any evidence that it's going back to consumers. Now I'll stop my political discourse and pick up my story. But I couldn't resist. And in our case, at Key, it's $60 million worth of revenue. And part of why that's important is free checking, which I think everybody in this room has gotten used to. Checking accounts are free, aren't free. There is a cost to them. Many of them aren't profitable. And we've used the fees from things like debit cards to help support our broader consumer platform of access to services across a broad range of consumers for free. So it does change the economics of your consumer business. So I would tell you that Bank of America made a logical business decision to say, we're going to charge a fee for a debit card. We need to recoup some of this revenue. Many banks had rewards programs with their checking accounts and said, we can't afford to do that anymore, so we're going to pull our rewards accounts. What we did was saying, this is the time, we went and talked to our customers and said, what do you want? And what we heard is, we hate fees, feels like you're nickel and diming us. We want to be recognized, we want to be valued, and we want somebody to know that we have a relationship and that you care about it. So we actually redid our rewards program and relaunched it. And it was kind of the great arms race. None of us knew what the other banks were going to do until, and we were coming down on the implementation of the Durbin Amendment, as it's called. Well, Bank of America got out there first with the fee. One young lady with a Facebook account went after Bank of America, and before it was over, created a furor, I think is an accurate term, a backlash. We're not going to pay for those fees, big evil banks. And suddenly Key started getting noticed all over the place for, there's a bank that didn't charge a fee, there's a bank that's going for relationship rewards, not pulling their rewards and not paying fees. It became what I call a tale of two banks with Minnie in the middle, that culminated in October. ABC Nightly News ran a story about banking response to fees. Key Bank was the one they reached out to say, please give us an interview about why you chose not to do fees, why you chose to do relationship rewards, help us understand. And they compared and contrasted Beth Mooney with Brian Monahan, the CEO of Bank of America. They literally did a 60 Minutes type thing with him. They followed him down the street with a microphone trying to get him to comment on why they were charging fees. It was hideous. It wasn't one of his finer moments. When he turned around, he looked really mad. Made the nightly news. So you have that whole thing, and then you suddenly have, well, we listened to our customers. They didn't want to be nickel and dime. And they literally had a big logo on ABC Nightly News that said, good banks versus bad bank, and Key Bank was very prominently displayed. Proud moment, because we really did it for the right reasons. We listened to our customers and said, that's not the response that's going to differentiate us in the marketplace. And it was within 3 days of that ABC Nightly News story that Bank of America dropped their fees. So you can do the right things the right way, take care of your clients, and hopefully we'll make up through this response some of the revenue we lost so we can subsidize other accounts. You know, we're still investing in how you do business with us. And I will tell you that the branch is still a cornerstone. When we do surveys, 90% of consumers still say that there are points in time that they want to have access to a branch in order to have a banking relationship. When they open an account, if they have a huge problem, they want to go face-to-face with somebody. If they're going to do a mortgage loan, sometimes they want to go into a branch. There's certain things people do if they're going to invest their money. So we, through the downturn, said branches are hugely important. They're how we gather our deposits. It's how we create our brand in a community. So we've built over 100 new branches over the last couple of years and modernized almost a third of our branches nationwide. When I first got here, I called it, we had Dairy Queens in an era of Starbucks. I went around to some of our branches and saw the lovely gray tile and the gray furniture and the gray walls. And I'm like, you know, this has got the warmth of the Department of Motor Vehicles. We need a new look. So our branches became very much part of building the brand. There are billboards in our communities, and we needed more of them, and they needed to be fresh, they needed to be energetic, and they needed to convey what Key is. So we did build out branches, and in Cleveland, we built, or at least in Northeast Ohio, we've added 26 new branches and modernized 60 of our 80 branches in this area. But more importantly is this online and mobile capability. This is some piece of, you know, where the puck is going. We did redo our complete online features, our functionality. It's easier to navigate. Our bill pay system has been upgraded. And then we've gone with applications on mobile phones. And we had to work very hard because Google is very fussy, not Google, Apple is very fussy about allowing you to have an app in their store for your bank. And it took us 2 years to meet their requirements. And on March 28th, soft launch, We didn't advertise it. We wanted to make sure it worked the way we wanted it to. We dropped our Google app for banking at Key on your iPhone. 30,000 customers in 5 days. We didn't advertise the bank. And for the speed of light with which you all understand how the world works, because I still don't have an iPhone. I'm never given up a BlackBerry until I have to. We, within 5 days, not only had 30,000 new customers, we were rated a 5-star app on the application store for the ease of using our application. So the speed of light with which our world is changing and keeping up. So it's not just the physical, I call it, it's not just sticks and bricks, it's clicks too. And then how social media is going to play into banking, I think is going to be incredibly important. We currently use Facebook as a way to communicate our sustainability message, what we're doing in our communities, how we support community development, where we are giving charitable dollars. And we're using Twitter as a way to resolve customer complaints for people who want to use that channel. But I will tell you that historically banks own the payment system. Debit cards, writing check, moving money around, that has been this exclusive purview for safety, for soundness by regulation of banks. But they're going to find a way that you're going to be able to tap your phone and pay for everything. Not only just pay for it, transfer money between each other, and somehow our industry has got to figure out how not to get disintermediated by where that's going. I will tell you, I don't quite understand how we will all get there, but understanding the implications of Facebook, Twitter, and all these different ways to facilitate payments and transfer information is going to be a huge opportunity as well as a huge challenge for our industry, and something that we are starting to study and understand. Service culture, to me, is incredibly important. When I said we were stuck in the middle 5 years ago as a regional bank, one of the things I said is we'll never be a branch on every corner. We're not going to be the most dominant mortgage lender. We're not going to be Merrill Lynch. So how does a bank make sure that they're relevant in a mid-sized regional bank? And a quote came to mind that I shared with our people at one point when we were really launching, how do we train our entire bank to think about service and client first. And the quote is a Maya Angelou quote, and it says, people will not remember what you said. They won't remember what you did, but they'll remember how you make them feel. So we built an entire service culture, how we train people, how we incent people, how do you create a customer experience that is based in service. And that's another interesting thing, because through the downturn, banks' customer service scores just plummeted. People were mad at their banks were cutting back. Our service scores have soared through the downturn. We are one of the few banks that year after year under the ACSI, which is the University of Michigan, kind of the gold standard in customer service, and they do consumer confidence. Every year we've been going up, and we have now the highest service scores of any bank, of a larger regional bank. In 2009, Business Week had us on the top of 25 companies in the United States for customer service. But the likes of Lexus, Ritz-Carlton, a variety of true service giants. In the middle of the downturn, Business Week said KeyBank has some of the best customer service of any company in the United States. J.D. Power just said we were one of the top banks in the United States for small business lending and relationships. I'm very proud of this, because this is what will endure with people, is when you treat them well and they remember how you made them feel. And I do think at the end of the day, the winners are hopefully our loyal customers that we build relationships with. We give them a differentiated experience. We're trying to be fair. We're trying to make sure we do the things where you recognize you're rewarded, you feel part of Key. And to a business customer, that we have products, services, and capabilities unlike any of our competitors. And like I said, you don't have to leave your office in Portland, Oregon. We brought the whole bank to them. One of my big jobs is selling KeyBank stock to investors and analysts. And I have, over the last year, gone around and visited over half of our investors to tell them the story of why they should be investing in Key. And I tell them it's the back to basics. It's the differentiated business model, that we've got a strong balance sheet, we've got a new management team. And what has really resonated with them is that we are different. And when I look back a year ago, we had 4 analysts recommending a buy on Key stock. A year later, we now have 12. And what they're saying is this is a bank to watch. It's a comer. It's got a differentiated strategy. The strategy makes sense for the times. And I tell our folks, shame on us if we settle for where we've gotten, that we've gotten ourselves back to a strong financial position. We're profitable again. We're getting recognized for things. Never let complacency set in, because good is never going to be good enough. And shame on us if we can't convert this momentum, this business model, this service culture, and all the things we're doing by our clients and community, and really bring our stock price back. So that's one of the things I'd love to challenge our people, because at the end of the day, my boss, and what will ultimately determine, I think, our success or failure as a management team, will be our share price. And today it closed around $8.22, which is my shoe size almost. That is not where we want our stock price to end. So with that, I thought it would be interesting to show you through the eyes of some of our employees that which I have just been talking about, how our employees view our clients and our community. So I'm going to play a short video, and then I look forward to taking questions.
I think the KeyBank community model is probably the thing that makes Key unique in our marketplace. We've got a $90 billion bank in Cleveland, yet we get to deliver that locally.
We can deliver big, and we can execute very well.
All of our folks are out there talking about not only their own line of business, but the power of the entire bank.
This is KeyBank. It's not the wealth team or the retail team.
The collaboration is real. It ranges from our key center managers all the way through our investment bank.
You have to build that internal rapport before you can expect to build that with a mutual client.
We're seeing more situations where we're competing against common household names, Wall Street institutions. Not only are we competing with them, we're winning.
Now, if I'm a high net worth client or a large corporate client, and I see 4 or 5 people dedicating their time to get in front of me to talk about how they can help my family wealth, my estate, my trust, my business, to me that's much more powerful than a one-on-one conversation, and that's what all our competition are doing.
What I love about banking is we're delivering products and services that can help people.
You know, we got to make sure that they think about Key as the #1 bank to go to.
Sometimes people of color are surprised that a bank really wants their business.
KeyCorp has done a great job putting marketing and branding behind that.
And making sure that we have access points for our clients, making it convenient for where they shop, where they work, and where they live.
And it comes from the very top, from Beth and Henry before her, and on down. Everyone truly does care about the communities from which that we do business in.
The word is out there on the street that KeyBank is the place to work.
And we're proud to say we're being very selective about the talent that we're bringing on board, and it's fostering a culture of high expectation.
We don't, sweep problems under the rug. We address them, and we bring them out and we talk about them.
We keep the scoreboard well lit, if you will, to ensure that everyone is aware of not only where our successes are, but equally important, where we need to continue to focus to become better.
2012 is about executing.
We're not satisfied. We've got a lot more to accomplish.
We really want to just continue to build on the momentum that we already have gained, because that's what sales is all about, is momentum.
That's where we want to go. We want to take market share away from the other guys across the street, and that's what we're going to do.
I'm going to try this again if I get away with it. All right, yes, question.
Yes, so regulation has been increasing a lot all over the industry. Do you ever foresee a coming back to reality or a deregulation environment over the next 10 to 20 years?
10 to 20 years is a long time. I will tell you that I certainly don't see, I think the financial crisis, its roots were in many ways in the financial system. And like I said, I'm not at this point in time rush between Main Street and Wall Street and the shadow banking system, but it was within the financial system. And there were practices that weren't safe and sound. There were concentrations of risk that I know we had in our bank, and I don't think you can have the downturn of the magnitude we have and not have regulation. Whether we've overshot the mark or over-regulated is not for me to say, because as I tell my board and I tell our employees, ours is to figure out how to thrive, how to use it to our advantage, to be nimble enough to adapt to the new regulations, do the things that will put us in good stead with the law and our regulators, and stay focused on our clients. So I spend no energy around what we can change. Can we get Dodd-Frank defeated? Will we get this repealed? That's a waste of energy. And I tell our people, if we do this right, we will turn it into a competitive advantage. What do people do when you hand them lemons? You make lemonade. And I also think our industry deserved a huge piece of what's happened. I probably wouldn't have done some of the changes the way it got done, but that's the law of the land and we'll live with it. And as all things, sometimes pendulums swing too far and they come a little bit back, but I also believe forever the landscape has changed, and I think in many ways it needed to. Yes?
I wonder if you could tell me what role, if any, credit default swaps and derivatives play in key banks' risk management and profitability. Do you do any of that?
Credit defaults and swaps. We have, and there is in the financial crisis, if you remember, AIG had a subsidiary that was playing fast and loose on creating books of business that weren't related to the bank's balance sheet, and it was one of the big things that took down AIG and ultimately really was part of the rotten apple through a lot of investment banks. We do as a bank, as part of our management of the fact we have loans and deposits and they're not always matched from an interest rate duration, we do interest rate swaps to hedge our own loans and deposits and our risk rate position. But they are, again, not for any speculative reason. It's against our own balance sheet. And then we do have a handful of credit default swaps on relationships over $100 million. They typically would be publicly traded companies, and if we're going to have a position of that size, we often will buy a small credit default swap to cover our own position. So we don't do anything that's not for the bank and our own risk management. We are not creating markets or trading, such as the Volcker rule will not impact our business. Yes?
Would you be in favor then, or Key Bank be in favor then, of derivative clearinghouses such as Dodd-Frank, or would you be opponents of that?
I would tell you that I think derivative clearinghouses for the kinds of derivatives that most banks use are going to create a transparent, healthy, good market. It will clean up the pricing, it will take some of the mystery out of it, and if you're not doing proprietary trading, I think a clearinghouse makes lots of sense, and so we would be in support of that.
Talk to us a little bit about what it's like to create work and personal life balance as a chief executive officer and as a woman in Cleveland.
Work-life balance, something I think I don't excel at. But that's not true. I always tell people, I'm a big believer that you have to be balanced, but it isn't the same for everyone. I tell our folks that I believe in faith and family first, and that if you keep that as your true north or guiding principle, and everyone has to make their own decisions of what works for them, you have to set your own priorities, you have to have a sense of what works for you, your family, and what you're trying to accomplish. But if you start with faith and family as the two most important things in your life and make sure that those are your priorities, then you can manage around everything else. I'm a big believer in doing what's right by that. In my case, I am a single female, so some piece of, I think, of my business success, honestly, has been my ability to move, my ability to take risks. I have probably worked more than my fair share of hours in my career. I've moved 9 times in 16 years before I came to Cleveland, and C.C. Riley was my realtor when I moved here. He said, get me a nice house in I've got 48 hours before I gotta go to work, so we gotta buy a house in 2 days. So I will tell you that I have spent a lot of my life disproportionately working, moving, taking on chances, but I've done it because I love what I do. So I don't look at it as what it took or that I had to do it to please somebody else. It was because it was my own internal fire, my own internal passion, that I love my work, I love my industry, I love the people I work with, I love our clients. And anybody who's around me knows I am a ball of energy and a ball of passion about what we do, and that's what I think people should feel about their job. I often say we spend either too much time at the office not to be happy there, and if this isn't your passion, go find something that is. And you do have to find your own sense of balance. And when I came to Cleveland, said one of the reasons I knew I was going to like it here is what's not to like about a city that's got half times and intermissions. The quality of the Cleveland Orchestra, I won't talk about the quality of the Cleveland Browns, but we have them. For a person who picked their university, the University of Texas, because of their football team, I still like football. This is a town that has wonderful cultural amenities, great sports events, great restaurants, and I will tell you, of all the cities I've ever lived in, Cleveland was the quickest to make home. I call it the Midwestern values and the Midwestern culture. People were warm, they were welcoming, they were genuine, and getting here and getting to work and getting a life came easily. And I say the best decision I ever made was to bring my career and my life to Cleveland, Ohio. Yes?
What's the #1 piece of advice you'd give a graduating senior?
Get a job. That's what my dad said to me. I would tell you it's a derivation of what I think I just said, and it was a piece of advice somebody gave me when I graduated from college. Life is too long or too short not to be happy at home and happy at work. So you may not find it in your first job, but I think as you go and launch your career, find something that speaks to you. Because I think in order to be your best, in order to bring that 150% game to work, in order to really want to do whatever success looks like in your chosen profession, you gotta love it. I think the passion, the commitment, and all that follows and how you show up when you're truly engaged in what you're doing is a huge determinant of success. Because on the other side of my career at this point, I can sense that in people who come to work for us. And there is something compelling and engaging about somebody who you can tell is on fire to be there, to make a difference, to be part of the solution, to be part of the team. It's an attribute that I have over the years in my career seek out in people, reward, and often promote around. It is that commitment, that energy, coupled with, assuming you're smart and you can do your job. Can't be all energy, nothing under the hood. So I would tell you that find something you love and do it well. It will build happiness in your life.
Under the new corporate strategy and revived earnings, do you see a small acquisition on the horizon for KeyBank?
A small acquisition like the one we announced January 12th, 2012. Actually, we announced our first small acquisition just this year, and it had been many years since we had done anything. Bless you. Okay. Was it something I said? Yes, very much. Part of what I think is going to happen in our industry is that there will be a consolidation of banks. Whether we're going to go from 7,500 banks down to 3 or 3,000, I don't know the magnitude, but I do know it is an industry with increased compliance, increased costs, low interest rates. It is an industry that is less profitable and harder to be nimble in than it was in a more normal economic environment, much less of a tougher regulatory environment, which will put costs and burdens into banks. Like I said, I'm not saying they're not appropriate, but they're going to be costs. So we announced our first acquisition in January. We are buying branches from HSBC via First Niagara in Buffalo and Rochester. And I tell our folks it's significant, exceeds its size. It's a rather small acquisition. We're 37 branches, about $100 million that we paid for these. But we needed to signal to our employees and to our market that we were going to be an acquirer. The Key was a bank that was going to look at how we could take our footprints, our capabilities, our business model, and become attractive to another bank to sell part of their operations or their whole operation will be good for their clients, will be good for their employees, will be good for their shareholders. And so it got a spring in the step of our folks to know that we were going to be among the people who could start acquiring. And I tell them we need to do this well and build the playbook on how we do more of these, because I see this as part of the future, how we're going to run and build our bank. But I also tell them there's nothing we need to be successful other than what we already have. These are opportunities. They're not what we have to do to succeed. It will just be a compliment. Yes?
You had mentioned that it's a competitive advantage that you're not one of the top 5 banks, yet you have growth aspirations. How big do you want to grow? Do you want to become one of the top 5 eventually?
I will tell you that I don't think as part of a new regulatory environment that anyone will ever be allowed to be that big again. As a matter of fact, just last week there was an editorial in the Wall Street Journal from the Dallas Federal Reserve President, Richard Fisher, who said, too big to fail is the wrong way to think about it. It's too complex to manage, and posted the notion that should we bust up the big banks because they've gotten to the size and scale where nobody can understand the risks they're taking. They're huge. So no, I don't desire to be a top 5 bank. I like this regional bank space. I like our business model. I like the fact we can be close to clients and communities. I think it is a scalable model. I do think there will be over time banks across our franchise that would nicely fit our business model, fit our geography, fit what we're trying to accomplish. And so I have more of a notion of building our bank, and I don't want to wake up and say we need to be in Arizona or why aren't we in California. We've got a franchise that we can build out, and the size that gets to be, I don't have a number in mind. I have a vision of being I call it being opportunistic and nimble about that which comes along. They could be small, they could be medium-sized banks, but they got to fit our model, fit what we're trying to accomplish, and we should do those in their time and in place as they come along. And part of the reason that's important, I have a saying, banks don't get bought, they get sold. See, it's not like you go and knock on the door and say, can I buy your bank? Banks sell themselves. Boards and management teams, for whatever reason, determine it's time to sell the banks. You never know what's going to be out there. You got to be opportunistic and nimble because you can't predict what will necessarily come up for sale. Yes?
Do you think Key got a major advantage locally or maybe even regionally when it became kind of the lead bank for Cleveland region after PNC took over National City?
You know, PNC is a very good bank, and they're a good competitor, but perhaps you can tell me, I'd like to believe there's some value saying we're the headquartered bank. Cleveland is our hometown. I don't know if you've noticed our billboard campaign, Our Home for 161 years, a little reminder that we are not only the hometown bank, but that we've been here a very, very long time. There are things that go with being a headquarters in terms of what you do for your community. I call it time and treasure, the volunteerism of your employees, what you're able to contribute to, our presence in some of the inner city neighborhoods, our differentiated programs that we have to help the underbanked and underserved. I'd like to believe that that is something our community values because we value it, and I'm not saying we don't advertise it as we are the hometown bank, but PNC, all banks are good competitors. I think they came in and did a nice job of integrating National City, and they're a very, very strong competitor, but I'm a competitive person and I'd like to win fair and square, and if part of fair and square is we're the hometown bank, I'd say that too. Yes, in fact.
Another one, the EPI, Everyday Price Index, is going up quite rapidly. And yet, Federal Reserve is continuing to hold interest rates unbelievably low. I just wonder what Key Bank sees in the future as far as inflation goes. At some point, all this extra money has to start churning faster than it's been churning.
I would tell you what we see is and again, the Federal Reserve, who's now gotten very transparent about their Federal Open Market Committee minutes, so we all know kind of what they're thinking, and they have been signaling for a very long time now, and most notably last August when we hit the big hiccup with the downgraded U.S. debt and how unstable the economy was, a very extended period of low interest rates, and they have indicated they see no inflationary pressure. in the core economy, that they feel like to stay accommodative and stimulative is important, because it is not a robust nor stable business recovery that we're in yet. So their lever is monetary policy and interest rates, and that's what they're doing. I would tell you personally, I'm not an economist, I think that there will be a point in time where inflation will start, and it could start pretty rapidly, and then there will be a reaction, and at that point in time, rates won't go up 25 basis points, they'll move in increments of 50 or whatever. But I will tell you, in our planning at this point in time, we have no interest rate increases in any of our forecasts until 2014. So we are saying long and low, and you got to be ready to manage through it. Yes?
How important is the ethical structure of KeyBank to its own employees, noting the black mark that the financial crisis kind of put on banks in general?
It's interesting you say that, because I'll go back to the notion of our values. I think it's perhaps the most important part of being KeyBank, for being a key banker right now, is to know that you are based in values, that it is about integrity, respect, accountability, teamwork, that we're in this together, that we have the right risk profile, that we're committed to doing the right things in the right ways, that it's about our clients, it's about our community. If that's not your mindset, and being part of, for lack of a better term, the collective good that's committed to being a back to basics bank, you wouldn't like working at Key. And that is, I think, one of the things as a CEO, the tone at the top and the leadership you set is perhaps one of the most important things you do. And I can tell you, I get up every day with the thought of how do I model my genuine commitment to that's the kind of bank we're going to be, so there's no doubt among our employees that we will run an ethical, integrity, basic business model committed to clients and community, doing the right things, and that will be how we win or succeed together or not. And everything I do, every message I send, I am conscious of, I am modeling that for our entire company. Yes?
You mentioned KeyBank's low stock price. Has KeyBank made any notion with regard to dividends versus share repurchase programs?
Yes, and everybody's stock price is low, it's not, we're unique. But with that, that is part of the re-regulation of our industry, that banks are no longer allowed with their board and management to make unilateral decisions to increase dividends or repurchase shares. That it has to be done with the approval of the Federal Reserve. So again, they're trying to preserve capital in the system. Key is one of the 19 banks that goes through what's called the CCAR process, stress test, it might be another name. Just like they tested the banks in Europe to see their capital adequacy, they put U.S. banks through that. We're one of the banks that goes through that process and has their results published, and then all banks over $50 billion go through the process, but they don't necessarily publish. This year, and you get an objection or a no objection or objection to your capital plan, you submit it to the Federal Reserve. This year we got a no objection to our plan, we passed the test. We have peer leading capital levels at this point in time, and we did apply for the right for our board to consider a dividend increase in May, which they will take under advisement in our May meeting, and the opportunity or the right to repurchase up to $344 million of our stock over the next 12 months, which we will have authorized by our board. And at this stock price, I would tell you our stock is an attractive investment for Key to make. And I would anticipate that it is likely we will repurchase $344 million worth of stock over the next year.
Two more questions.
Two more questions. One.
How exposed is Key to the European market, which seems to drive a lot of what happens in the United States, particularly in stock market?
Yeah, my notion that the world is flat, who knew that what went on in Europe would have such an impact in our markets? From a direct exposure, it's very little. We don't lend to European countries. We are not an international bank other than supporting our clients in their ability to do foreign exchange and trade sorts of things, but we don't have direct exposure. But we all have exposure to, I think, obviously the impacts that their banking and debt crisis is having on the, I think, if nothing else, the robustness of the U.S. recovery, our own stock market. But when I look at direct exposure, that's not my concern. But I think we're like many institutions, it does impact, I think, the quality and the robustness of the U.S. economic recovery in ways that we can't predict and control. And then I will tell you, I think if you look at the fourth quarter of this year, our economist at the bank calls it tick-tock on the fiscal clock was her nickname for it. You know, we have another debt ceiling debate in the fourth quarter. We have the Bush tax cuts coming off and a few other things coming up. And in our own country, in this fourth quarter of this year, there are going to be a lot of things that either lapse or expire or need to be dealt with in a post-election environment. And I don't think it is totally clear how we are going to handle all those things. And I think we got a bump, or at least an air pocket in our own economy as we go into the fourth quarter of this year as we look at a lot of those things. But Europe roils through the worlds and the markets, but we don't have direct exposure. And last question.
Yeah, very nice talk, by the way.
Thank you.
What's your view on an idea of Key Bank creating a venture capital fund? So all these great students from John Carroll that have come from all over the world can stay here, invest in a business, then you'll have more customers.
Venture capital is prohibited under Dodd-Frank. That you're not allowed to do that anymore. And we actually did have a group we called Key Principal Partners that did have a variety of fund-to-funds and some direct investments. And under Dodd-Frank, that is no longer permissible. But what I would tell you, Key Bank would love to look, we are still hiring. We hired all the way through the downturn. We never stopped building branches. We never stopped investing in our bank. As a matter of fact, in the community bank, which I used to manage, we started a training program in the middle of the downturn. And what we need are fresh faces, people who have a passion for banking. And I'd love to hire a handful of you out there. So that is what I think we can do to help people in Cleveland, Ohio. We have training programs, we have jobs. The venture capital is off the board. With that, I'm going to say thank you, and I look forward to the opportunity to visit.
Just a couple comments, and students will be able to go, and then we can go to the reception. I want to thank Beth for being the 54th Mellen Series speaker. Very enjoyable being a Jesuit institution, hearing what you said about inclusion with others and all. It really strikes home. And I think seeing businesses do that, well, the ones that are good businesses out there. Also, the outstanding contribution to the Mellen Series. So, welcome that also. At this point, Nick Gabrielli has just tokens of our appreciation for you being here with us today. Nick is the upcoming president of the Bold Finance Association, and I thank him for doing this. Before we start the reception, just a couple more comments. I want to provide appreciation for those that have helped make this series possible. Nancy Bonacci, we all know well at John Carroll, as Director of Research and Equity Markets and Equity Research. Nancy was our contact person and seeking Ms. Mooney as our Mellen speaker. Jennifer Vensel, Assistant to Beth Mooney, helping with planning and organization. Carolyn Rathbury, Assistant to Tina Evans, helping with, again, planning and organization. Trina Evans, Director of Corporate Center, I guess Chief of Staff, helping with the brochure and presentation. Lynn Woodman, Senior Manager of 3 Marketing, helping with brochure and presentation. And Phil Morrison, who's here today, is to help with arrangements. John Carroll, special thanks go to Kathleen Stover, my Mellen assistant, who made all the arrangements and to make this possible and make this work well, work at all. And the students of the Bowler School of Finance, I'm sorry, Public Schools Finance Association, helping us here today. We look forward to seeing you at our 55th Mellen Series presentation in the fall. We do not have a commitment at this time, but I think there's a high likelihood we will have one by next week. And so we look forward to having you in the fall. The reception now continues until 7 o'clock. Beth Mooney will be available during the reception if you'd like to meet with her. Thank you all for coming to the Mellen Series and look forward to seeing you at the next one. Thank you much.